Significance of these cross currents for technology stocks with Mark Hamrick, the Bank Great Senior Economic Analyst. Rebecca Walser back with us, Walser Wealth Management. Rebecca, technology I always feel gets sort of overbeaten when rates back up, and I don't know that quid pro quo relationship. It is what it is, and it happens almost to a T. But do you think it's been overdone? Do you think it's been overwrought?
You know, I would say just generally with technology, yes, Neil. I mean, there's not the reason that people leave technology because they think that it's going to take a long time to actually get a return on their profit. They think that it'll hit big when it finally hits, but it'll take a while. You know, you've got unicorns or you've got, go-to-market IPOs that are still not profitable, and they hang in there because they expect a big payday at the end. And when they start to see interest rates go up and they say, oh, I can get a fixed percent, 2% fixed without any risk, let me go and take some of the money and do that, instead of having to wait so long. So that's why you see NASDAQ come down as rates go up. And it doesn't make a lot of sense because you would think it would be the exact opposite. These are speculative people that are wanting high returns fast and growth stocks, and then they go to safety. It doesn't make sense, but that's the interplay there. And I do think, with Shenzhen, that is the Silicon Valley of China. So people don't understand that the impact is significant, and it should help our tech stocks maybe. Yeah, absolutely, Neil.
Mark, you mentioned China, and there's this threat of sanctions that we're going to impose if China helps Russia, particularly if it helps it militarily, forget about economically. All bets are off there. It's one thing to sanction Russia, not a major player, no offense to the Russians on the global stage, but not nearly in the camp of China. So I'm sure you watch that closely.
Yeah, it's something to watch, Neil, and yet we don't want to have any more geopolitical risk coming into the system, but it seems to be multiplying on a number of fronts. And, the question remains, and at this point it's a rhetorical one, lacking the knowledge to answer it myself, and that is how much more trouble does China want to court, right? And so it has its own issues with its own economy, and the shutdown is a good example of that. And here we are talking 2 years after the pandemic, and we're still talking about supply chain issues in China. So absolutely something to watch.
Rebecca, too, when you talk about China, the politics notwithstanding, these COVID spikes are pretty severe. Better than 50 million Chinese are in lockdown right now. Virtually all of Shenzhen, this technology hub you alluded to earlier. So they've got a serious COVID problem here. And that's where it all began. Does it worry you?
Neil, the thing is they have a COVID zero policy. And I think anytime we continue after 2 years to have a COVID zero policy, we're going to continue to get this. We have to look at the science and
so
say,
you think they're overreacting, Rebecca, right?
Yes, yeah. We are beyond this now. We have therapeutics, we have other things, we have these gene therapy vaccines, we have all of these things, and yet you're still getting a COVID zero. Can you imagine, Neil, if we had a flu zero policy in the United States, if we shut down every time there was a flu outbreak? This is not workable in a global economy, and until the Chinese and all of the world realizes that we have to worry about countries that have such strict policies if our supply chain depends on them.
Mark, finally, you're a very good economist, and you're watching the Fed tomorrow. It's expected to raise interest rates a quarter point. Some have been saying it will follow that every 6 weeks at a Fed meeting. Others are advocating for more increases, and those that might be in between meetings. Where are you on this? What are you forecasting?
Well, one thing I think people don't sufficiently appreciate, Neil, is that these meetings are all so-called live. And that means that while we will be diving into that dot plot to see the trajectory, they make it up as they go, as they ought to, right? And so I would say, Chairman Powell is going to have a news conference where he will address what is a very high degree of uncertainty. We have those sources of uncertainty almost emerging on a new basis every day. But it's also true, Neil, that the Fed is behind the eight ball. They do want to get monetary policy back to nominal, and we're a long way away from that, having just ended asset purchases. So we'll see whether the economy can avoid real problems here, but the risk of recession is no longer zero.
All right, we'll watch very closely. Guys, thank you very, very much. I know I ping-pong with a lot of things, but I wanted to get your thoughts on all of these breaking news developments, and you delivered, as you always do. By the way, we're learning